Okay, so let's have a look at Delaney for 2017, January, the first transaction. So he decided to revalue land and billings. So when we revalue land and billings, that means that our billings is going to go up, is going to increase. It also means that your depreciation is going to increase because we need to get rid of it. And then you're going to create a revaluation reserve in your liabilities, which is where you're going to put the two. So the first thing to find out is what is the increase. So our land and billings has increased to 800,000. The cost of our land and billings was 630,000. So the increase is going to be 170,000. So in your tabular statement, so land and billings for January is going to go up to 170,000. With that then, that 170,000 is going to go into revaluation reserve. And also the depreciation will go in as well. So 25,000 of that needs to go across. So now our balance for depreciation is now 0, which is correct. So our assets have changed by 170 plus 25, so by 195,000. So that means your revaluation is now 195,000. So that means that the assets and the liabilities are now the same. That's the quick way of doing it. Okay. The theory behind it is going to look like this. You're going to have your land and billings account, you're going to have your cumulative depreciation account, and you're going to have your revaluation reserve account. Your land and billings, so this 630,000 is going to come straight from the question. So that's the value of our land and billings, 630,000. We've revalued it to 800,000. So that's going to be the new figure that we're going to bring down to the next period. So it's going to be our balancing figure. So the difference between the two is the 170,000. So we're going to debit our land and billings by 170,000. So if you remember your assets, to increase your assets, you're going to put in the debit side. And your revaluation reserve is a liability because we owe it back to the company. We haven't sold it yet, so we owe that back to the company. So in your revaluation reserve, to increase the liability, you're going to put it on the credit side, so it's 170,000. Then remember, when we revalue anything, we need to also bring the depreciation that we have paid so far on the asset over to the revaluation reserve. So you got 25,000 already paid in depreciation, so that's just 25,000 here. So we're going to credit our accumulated depreciation account. To get rid of that then, we're going to debit the accumulated depreciation account 25,000. So now there's nothing in our cumulative depreciation. So we're going to debit our accumulated depreciation account and we're going to credit our revaluation reserve account. So our balance for the revaluation reserve account is going to be 195,000. So these three accounts then, so our land and billings, we know it's an asset. So it goes on the debit side, so we're increasing it by 170,000. Depreciation is an asset with a credit balance, so we're increasing it by 25,000. And then a revaluation reserve is a liability, goes on the credit side, we're increasing it by 195,000. So that's the reason why your tabular statement is going to look something like this. Okay, so 170,000, 25,000, and then we've got 195,000. So you can put it straight onto the tabular statement if you want. Make sure you don't make any errors, or you can do this adjustment to help you calculate them. And that's January completed.